where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Good afternoon? No, maybe for some of you. Good morning. It is Thursday. We had some news this morning. Nothing too crazy. Core retail sales came in better than expected. Unemployment claims came in lower than expected. Markets are off to a bit of a boost to kick off the day. Nothing too crazy. Had about 30 minutes of upside. Yesterday was a little wild and crazy. Trump kind of tested the waters by saying, "Hey, I'm going to fire Powell," and the market reacted very poorly. And then he said, "Wait, I deny that. I didn't say that. Nobody ever said that." Anyway, noisy day. The market was down about 0.74% in about a half hour, and the VIX spiked up about 15%, and then it reversed course and ended up finishing higher for the day. So, interestingly enough, we did a pretty spot-on move around a 1.07 right there before the market topped out. And I still think it's the same thing I talked about, like literally a video last week, video this week, which is watch the level at 63 for resistance, watch the level at 62 for support. And right now we're just kind of surviving in between. So that is the plan. So today, what do we have? Well, price is up for the first 20, 30 minutes and stalling here. Are we going to go up to retest the weekly highs, which was Tuesday's CPI news high? Or are we going to fade and get out of this? I've got a dead zone here where I can make money. If price is above this, I make money. Price is below this, I make money. Inside of it, end of day, I got a little dead zone. It's only 20 points wide, so I'm hoping that price doesn't stick in that dead zone today. But I'll find out. So that's one of the trades. I didn't get enough premium to sell where I wanted to. I'd like to sell it higher than 6,300, but the premiums were so crappy that I didn't take the trade. So I'm looking to see, like, do we get up to 6,300 today? Is that going to be, retest of the highs for the week? Or do we take out today's 20, 30 point move and give it all back? We'll find out. I think there's some sticky levels around 62.60, 62.50. But if we start to fill up some runs down to these directional levels, that would be kind of nice. So we'll give it a chance. All right, let's do some top down here. Currency strength. It was the dollar and pound on top this morning. So dollar's making a run. It has been since about 8 p.m. last night. Dollar showing some strength. Aussie since around 9 p.m. last night. This all Eastern time. Aussie weakest of the day. Everything else, you've got dollar, pound on top. You have Aussie on the bottom and everything else in the middle. So, still fairly contained, but 60 on the upside, 60 on the downside. Big move on the Aussie dollar to the downside, right? Aussie dollar showing signs of a pullback. I mean, this seems like so manipulated. Honestly, like I can't tell you the last time I've seen a currency just move like so perfectly choppy, perfectly trendy in a channel. I don't know. It's kind of weird. It just seems like there's a lot of like a lot of hesitancy in the currency market. There's obviously like melt up in the stock market. It's being carried mostly by top 10, top 15, top 20 stocks. The S&P 100 doing really well this year. The S&P like top 25 doing pretty well this year. Market breadth is narrowed quite a bit. Like we're considerably concentrated once again, but it's not enough to derail. And the price action is suggesting like we're not really breaking down yet. This poke at 62 was a rumor and denied, and the market is I just think it's complete misdirection. So this is what happens. This is the difference between trading and investing. Investing, this is even on your radar. Trading, you see this stuff trading every single day. You trade 0 DTEs. You're like, holy crap, that's a big move. That is a big move. When the market drops 0.7% in 30 minutes, that's a big move, right? That's a 0.86% drop. This market moved 53 points in about 20, 30 minutes. That's a lot for intraday volatility, which is why the VIX spiked up 15% yesterday and then faded. Here's a move on the VIX yesterday. So VIX expiration was Wednesday morning, and then we had that rumor that Trump would want to or wants to fire Powell. Market hated it, and then he denied it, and the market came right back. So VIX came back with it. Okay. So we'll see what ends up happening for the day. If I can get out of this yellow box in this little dead zone, that's good. If we break the lows, I'd like to see it below 62.60 and lower. I think we have a pretty good floor here, like intermediate support around 62.40. So that wouldn't be a bad spot for me to see some price settle today, 62.40 area, or obviously get up and try to retest the high at 62 or 6,300. So if we just stay here for the day, that's not going to be my favorite. I'd like to see price go a little bit more directional on a Thursday, trying to get somewhere for the day, good or bad, because I just needed to get out of that dead zone. Okay. All right, let's go. Tail of the tape, we're SPX positive slightly, Q slightly positive, Dow slightly positive, Russell reasonably positive, pretty good actually on the Russell. So still choppy, hasn't really rolled over yet. I've got a lot of August 1st expirations on some of my covered calls now. This week, some trades and some winners. Did a lot of rolls this week. Took a naked put on NVIDIA. That's my highlighted trade of the week. It was a 350 credit that I closed down for 23 cents. I also did some rolls. I have a collar trade that I rolled out for $1.45, which adds to my bottom line. I've got naked puts on American Airlines that'll be for full profit for 100% gain. TLT, I did some rolls, and Tesla, I did some rolls. Lyft, I think I need to actually. I've got a cover call that expires on Friday. I'm going to go ahead and probably roll that down. Or did I do that on Lyft already? I think I may have, or I just looked at the prices. Let me check. Lyft. Okay, so these $18 calls, I'm going to end up rolling down. Maybe like a 15 or 16 covered call and try to grab like 40 or 50 cents, only out for another like couple of weeks. So trade at 1482. Yeah, I don't know. Couple weeks out, maybe as long as I get like maybe close to 50 cents on the covered call. That's not bad. Tesla did some rolls. MicroStrategy did some rolls. SPY did some rolls. Johnson & Johnson took, I'm actually looking at taking some profit here. Johnson & Johnson's up to 163, 164. I've got bull put spreads that are up about 70% of max profit. I pulled in 528. And I mean, I'm up 360. I'm gonna let this go a little bit longer. I think we're good. Naked put. This was up over 500 bucks. 72% of max credit. So I'll let these go a little bit longer. Healthcare space seems pretty healthy right now. I'd like to see Johnson & Johnson get this lift off to maybe bring up the healthcare sector a bit higher. I'd like to see if something like, Pfizer can benefit from that. Eli Lilly had a big day this week, like, healthcare sector in general. Eli Lilly are big names, Pfizer, Johnson & Johnson, AbbVie, some of those plays. What else? Pfizer is 24.63. Ethereum's been ripping to the upside pretty nicely. I've got some trades running on ETHA. So Ethereum is, I mean, this is quite the run. This has been outperforming Bitcoin pretty nicely. This last little stretch from June, so end of June to now, Ethereum is up 64%. That is pretty good, considering Bitcoin from that same stretch is only up a fraction of that. Bitcoin's up around 25%, which again, nothing bad, but 25% on Bitcoin versus 64% on Ethereum. Compare the two, and you're seeing an outperformance. This is what I measured. I've got a chart alarm set here at Symmetry. So if we have a high, low, lower high, lower low, to me, that's where Ethereum kind of matches some symmetry and outperforms Bitcoin, and I might look to take some profit. So if I go back to my trade on Ethereum, if Ethereum runs up to these intermediate highs around 4,050, we have all-time highs at 4,800, 4,875. This to me is a good profit target. So these positions I set up for Pulver alerts. This one is filled. This one is pending. So that one has not been filled yet. But the trade was taken right in here. And honestly, at this point, you can take the stop loss and kind of move it up into break even or better. I wouldn't take any risk on this trade. So if this just wants to run, let's see if we can hit intermediate levels. That's a good profit target. 4,000, 40, 50, good profit target. If you want to be a little bit greedier, then obviously trail it up into maybe all-time highs. Okay, but Ethereum's been a nice little run. Let's go dollar index. Catching a bid like I thought off of Symmetry. We're on the right-hand side of this little trend line. hitting the 50-day moving average. If we get above the 50-day, very possible to run up into the 100, 144. I think this still pulls back to 101, possibly 102. I think the dollar catches a bit of a bid. If the dollar catches more of a follow-through bid, it wouldn't shock me if the stock market does sell off a little bit. We're quite overextended. I don't see a lot of option flows through 6,300 right now. I really don't. I feel like there's almost this like huge call wall at like 6,300 to 6,350. I don't see us going too much higher than that without having some type of pullback. The call skew is one of the more like saturated that I've seen. We have lots and lots of call skews. The call premiums are really, really high right now. And so that's a good thing for if you're owning shares of something, selling calls, you're getting a decent premium for it. If you're buying calls, you're paying a lot of money for long calls right now, which is why I'm not doing it. I'd rather either sell calls against ownership positions or wait for a pullback to start selling some puts again if volatility increases slightly. Okay. So we'll see if this catches a bit more of a run from, just trend line to trend line. If we just run from this intermediate trend line to this kind of outer around the 100 moving average, something like that would work. Oil, 65 support still holding. Natural gas at 1592. I've got a covered call at 1650. Gold, sideways. Silver, sideways. Silver might be a bit more volatile since we had a thrust higher, but silver to me is still supported here, supported here, supported here. Any type of dip into the moving averages and then back up, I'd still like to buy silver. I'm targeting at least 40 bucks on silver. Ideally, I'm targeting $48 on silver. So I'm willing to hang on to this one a little bit longer. This has been a campaign trade for me for a while. And, once I had some really good profits on that last 2 to 3 year bull run on gold, I started to transfer some of those profits into building a silver position to allow silver to catch up. Okay. All right. Bitcoin, 118, recent highs at 123,300. MicroStrategy creeping up here. We've got earnings on MicroStrategy out to the end of the month. I'm just doing some income trades. I've got some collar trades, and I've rolled up my strikes. So let me get my new break evens here. Let me got to update this on the chart. So this is MSTR. Okay. Okay, so I've got a break even with a cover call at 400. I've got a break even at 364, so that's up about $3,600 that I'll keep rolling. The other one is own shares at 358 with a cover at 390. So that's up. That would be up about $32 per share. And then another one that I've lowered all the way down. This is kind of crazy. I bought this thing at 346. $346 was my initial purchase price of MicroStrategy. I now own 300 shares that started at 346 that are now down to 243. I've lowered my cost basis by over $100. So that's, $100 a share is pretty good. And let's see if I can just keep adding the income side of that. Okay, so not bad. I mean, overall, it's like MicroStrategy is one of my more profitable positions, and it's not even like I'm getting all the appreciation, the upside. I'm in a good position. I've collected a lot of premium. I'm just going to continue to roll and get some income for it. And right now, MicroStrategy is up around $55,000. So it's a good chunk. I think it could be bigger, and I'll continue to hopefully add more income to it. And that could be maybe 55K becomes 65, 70K, 75K by the end of the year. Not a bad racket on MicroStrategies by establishing some positions, starting with some collar trades, eliminating some volatility, have some downside protection, and selling a bunch of calls. Okay. All right. Some of that action there. Coinbase 411. Whew. Well, I do have a call condor on this one out to the 25th, which isn't that far away. I do kind of like this trade. Right now I'm down $11. This is a call condor. I do have a profit trap here. I'll show you what this looks like. Let's go to analysis. Okay, this is price trading at 411. I do have a profit trap. This gets into, July 25th expiration, which should be next Friday. Hopefully this doesn't continue with this crazy clip to the upside, or else I'll take on a little bit of heat. However, if we just keep kind of slowly grinding on Coinbase, this does potentially get into that profit trap. I still have about $44 of wiggle room here before price is going to be threatened, but that's my trap as well. So it's also possible that on this bull call spread component, this side of the trade, my 445 by 450 is a $5 profit trap, and then my sell call is 455. So the reason I took that trade is because the call skew was so great and so extreme on Coinbase that I'm like, I'm just going to try to put in a profit trap of here, give myself like a low delta. So this started out at like maybe a 15 delta. And so if price is going to test that, which before earnings, I mean, I get that we might ramp up before earnings, but we shouldn't have like a huge move. So this is either going to be like a $60 winner or potentially runs up into a profit trap, and maybe I turn that, $60 into like 160, 260, $360. Max profit would be 560. Okay. All right, that's Coinbase. Ethereum, like we talked about, big run since when were those lows? Lows in June up 60+%. Ethereum has room to get to intermediate highs. That to me, like I said, is a big profit level. I would be willing to take some profit there, not holding Ethereum much longer, or at the very least trailing stops in case we run up to all-time highs. Copper, not a surprise move off that big like 50% tariff announcement, rips up to one of the biggest moves like ever and is fading from there. So not a huge surprise. I just didn't have the setup that I was really happy about. Plus the bid ask was really wide because the futures market kind of blown up a little bit. But it's not a surprise. We're showing some resistance on copper, probably pulling back into some efficiencies here. Japanese yen has been a little bit weaker. The Nikkei looking somewhat better postured. EWJ off these levels. I'd like to see EWJ get to all-time highs again. The DAX just off of all-time highs. The DAX looks like we could be forming a rising wedge. It might be a little premature to call that right now, but something along these lines, where it just seems like, okay, this low, this high. I mean, is this just coil and coil and coil and coil? Does something bring this back down? I mean, I think if you're patient, I think you could get a pullback to same low or a better fib zone that offers a dip opportunity to buy. I hope. I mean, this is the hard part, is if we just go up and up and up and up and up and up, right? Because the stock market oftentimes does one of two things. Either it runs like this and you're like, oh my gosh, it's going to be such a good trade to short it, and it goes straight up. And that's the capitulation move that then tops out and then forces the sell trade. But don't force a sell trade if you don't have confirmation, because these markets, especially in equities, especially in indexes, benefit from positive drift. So that positive drift means it just doesn't stop. It just doesn't stop. And then when people think it clearly can't go any higher, it rips higher and looks even more stubborn to the upside. And that's usually when a top is going to form. So, I mean, if you're in DAX, you're probably going to see more all-time highs, and that's okay. I'm just a little cautious on how much higher this thing goes after this type of reflexive move from low to high. And if this structure breaks, I mean, I would love to see a little bit of a pullback first and reestablish a discount and then get back to those all-time highs and just trade, trade the index, as opposed to well, got to participate. I mean, I would have never been happy buying a 236 pullback right there. So I didn't. I mean, I was looking for at least a 30 or 38% pullback. Never got it. But it's just drifting. There's room to probably get up to this 18127 zone. If I put a number on that on the DAX, you're looking at maybe a push up to like 25.5. So 25,500 or 26, basically 26,000. Between those two areas, I can see the market topping out and stalling a little bit on the technical side. FTSE also hit all-time highs, stalling here, but similar, right? Not even a 236 pullback from this low to this high. Not even a 236 pullback. So does it have room to maybe get up into the 18127 and then pull back a little bit? Sure, maybe. I'd like a dip to buy. I don't really have great structure to say this is a potential, rising wedge thing. It's not there yet. So I didn't even get the pullback that I wanted. So I have no trade on the FTSE right now. Argentina, right around the 200 moving average. Because this one was up like 80+% last year, I'm not that excited about buying Argentina. China pokes the highs 2 days ago. Brazil a bit of a reset. I'm kind of disappointed. I mean, the good thing is it's above the 200 moving average. I'd like to see it stay there. We got a gap fill here towards 28 if we get a run up. Fill the gap at 28, try to get to these recent highs at 29. Hopefully this is a nice spot for bulls to be accumulating after getting above the 200 moving average and putting some higher highs in. So I'd like to see if Brazil can continue to work its way through. Maybe it's a grind until we start to really get some traction, but I'm still long Brazil and Latin America. That's EWZ and ILF, but they're holding nicely postured above the 200 moving average, which is good. Mags, we've had, I think Tuesday put in a bit of a hot, that was our red candle right here. That was Tuesday after the CPI fade. And then yesterday was indecisive. Today's the same, just indecisive. So not a lot of direction either way. So we'll see what the day ends up giving us. Apple, heavy call amounts in Apple. I'm honestly, I'm trying to think. I put in some ratio spreads on Apple. I don't think I labeled them yet, but they're all here. The 170 by 165 ratio spread. And then I've got a little scanner play, covered calls 180, 180. If I were to, I mean, kind of hate this trade. If I were to like sell a put at 170 and sell a call at, I don't know. I'm curious if I did like a strangle on Apple, what it would look like. I think I've got this trade in for a lot of my clients here. This is a ratio spread. So if let me look at a trade right now. If I went out, Apple has earnings on the 31st. Let's see if I were to sell. Yeah, I mean the puts they offer nothing. Like I go out, 30 days after earnings. Puts don't really offer much. The call side though, I mean selling calls at like 220, 225, 230. It's like those are great. Those are pretty good to be honest. And at the money gets you, $7 to $10. So even a trade. I mean, hell, let's go earnings 31st. If I went to the 25th, could I generate some income on Apple right now? If I bought the shares at 210, if I bought the shares at 210, I can pull $3.20, which gives me a little income trade. I'd still own shares of Apple. Get this before earnings. I don't know. It might be a little silly, but I'm like, I could probably generate by next Friday maybe $200 to $300 if price is greater than 210. Right, we're greater than 210. Then I pull in $300 of income by next week. Like that's not a bad trade. Now, granted, it's going to cost me cash wise. It's going to cost me like $20,000 to do that, but it's using that cash for a little income trade. Now, the smart trade, in my opinion, would be if I buy Apple and I want to go out a little bit farther, like go through earnings August 1st. Now I can sell a covered call at the money, 585 for income, and I try to finance it for like a big surprise move to the downside. Maybe something like that, where I can still get. That's not right. If I sell the 210 and I buy the 190, basically I'm selling an at the money call to collect the income side, but I still have downside protection through earnings. Something like that, where it's like, okay, I still get $500 if price just stays where it is through earnings. I mean, it's anyone's guess. Are we up or down? But I do have some protection if we have like a big push. Apple earnings would be the 31st. So actually, it might be a little bit safer to do something like this. That's kind of crazy. Look at this difference right through earnings. Look at the call premium at earnings. You go to August 1st, you get $5.80 for a 210. You go to August 15th, you get $7. Okay, so I could still get the income side. If I sell the 210, buy the 190, I still get $6 of income, and it's protected out a little bit longer than just earnings. So if I'm desperate for income, that's not a bad trade. I'd buy the shares of Apple at 210, collect $7.30 on the covered call, buy the 190 to make sure I have some protection. If price is greater than 210 through earnings, then I still get $600 on the trade. That's not a bad return on risk. So I'd go 210 minus $6 is 204. Get it called away at 210. So it's $600 out of a 2,400. So $600 out of 2,400. I'd make 2.9% in about 30 days. It's not a bad trade. Not a bad trade. So I'm going to put that on the list. That might be a to do. If you're okay with the buying power, I might do that on Apple. Apple usually doesn't have a ton of volatility. I think the downside protection would be important just in case it's a disappointing earnings. One thing on the daily chart is we are still below the buy zone. Like this is a resistance level, resistance level, resistance level, and if this holds, Apple has room to fall. Now, again, just thinking about risk. If I bought the shares at 210 and it falls to 190, I do have a put that would protect me. Okay, I would be able to lower my cost basis a little bit, but the goal is I need to lower my cost basis a ton just to make sure like I'm not taking on too much heat, and then I'd kind of get in the trade, repair it. So there might have to be some backup plans where if price goes up, I get it called away at 210, I start rolling it more for more income. If price goes down, I've got to have a plan B, which is I can have put protection. Okay, lower my cost basis, do the math on that, and then also roll this call down and then repair the trade for hopefully, the goal is to make like $500 to $1,000 in the trade. If I'm going to allocate about 20K in cash, I want to try to make, hopefully $500 to $1,000 on a flip. I don't want to hold Apple. I just want to, turn it into an income trade. Okay. Anyway, so I'm interested in doing that on Apple. Amazon at 222. Broadcom, fudge, man. I've got a bear call spread here. I think it expires at the end of the month, or is it this? I think it's this. I think it's Friday. I think I timed that like an idiot. AVGO. Yep. So that's going to be worthless. Shoot. Well, Broadcom doesn't want to stop going up, so it looks like I'm going to lose on that by tomorrow. And honestly, it's probably going to be a trade. I wouldn't be surprised if this level, I'm just going to humor myself here, this level is probably reached by the end of the month. We probably get below 265 by the end of the month or into like the August expiration. I just, the market needs a pullback. So I just timed it poorly. Google, still fine. Nothing crazy there. I don't know. I might compare the difference between Google and Apple. Just look at like call premiums, which one's better. Meta, not touching that one right now. It's just resistance. Microsoft also bleeding up to all-time highs. Netflix has earnings today after market. Market makers looking for a move of around $87, I think. Netflix, we have about an $80 move expected. Average earnings move is around 4 to 5%, if I'm not mistaken. Let's go Netflix here. Average move is about a 10 to 11% move. That's the average move. So let's go with 10% times the 1257. I mean, that's a $125 move. That could certainly happen. That's on the conservative side of 10%. We've had as much as 13%. Oops, 13%. 1258.18. That's a $160 move. We were trading at 1257. I mean, do we have a $120 to $160 move in the cards? That would be a blowout move on Netflix. But if we get it, I do have a price to fade. I'm trying to sell a 14. I think it's a 1400 by 1405. Trying to get that filled for a decent credit. So I'm trying to sell like the high end of that move, that expected move. If Netflix somehow misses or stalls, then we come down in price. The hard part about this one is, as much as I'd love to say I want to trade a bunch of options on Netflix, it's it's a $1,200 stock. I'm not that interested in a $1,200 stock. Not with controlling at least 100 shares to do an options trade, so it's just expensive. I'm not going to take that trade. But if this splits again, then there's a lot more I can do with it. Nvidia up to some fresh all-time highs at 173. Did some rolls this week, saving an extra $1.50. Tesla at 321 did some more rolls this week. Berkshire Hathaway, we are now sliding quite a bit below. This is one way to look at Berkshire Hathaway. If we start to see Berkshire back above the 200 moving average, that might be worth taking a stab to go long. I'm not sure why this stock is not getting much love outside of maybe the market's treating it like, well, you're net sellers of stocks last year. The stock market's up, the resiliency. Berkshire Hathaway's not an AI, blah, blah, blah. But it's not doing well. I mean, this has been kind of underperforming the indexes, which is a bit of a surprise. But where do we go from here? I don't know. I don't think we go too much lower than, that low or that low. But the safest trade would be if we get back above the 200 moving average. If that's the low, then you look to get the upside to return. So there's some decent reward to risk there. But I want to see if this will actually turn and close back above the 200-day moving average. Okay, bonds, 85.41, bit of a bid there. Let me see. Actually, I might go into ZB today and let's see if I can grab something. I do a little bond spread today. So I can go Friday. How much risk do I take in if I put in like a low delta? That's not exactly a good trade. $31 to risk 470. Probably not a great trade. 78 to risk. I mean, those are just terrible trades. That's better, but now we need to see price go up and catch a bid, which I don't really believe that. So I don't know. I'm staying out of bonds for right now. TLT is enough. I'm just going to keep working the cost basis down on my diagonal spread for TLT. Okay, let's take a look at 10-year yield. 10-year yield has been up recently from, it's been up about 30 basis points. I still think it's sticky. This whole idea of, wanting the Fed to cut, the bond market's going to tell us whether it's a good decision or not. Yields go higher, it's not good. Yields stay the same, okay, fine. Yields go lower, probably something bad is happening. I just don't have a lot of confidence that the market's going to naturally just let yields go lower, right? To me, if yields go lower, that means bond goes higher. Bonds go higher, that means equities probably drop, right? Yields go higher, yields go higher. Why is that? Because what bond traders are telling the market is if you want us to hold your bonds, if you want us to bid your bonds, pay us more premium, right? Which is supposed to be a risk-free premium. So I think that the global bond market is still trying to tell the world, hey, if we're going to hold U.S. debt, if we're going to hold U.S. bonds, we want a higher risk premium, and that is a to be determined. So this is to me one of the bigger stories of 2025 to see if we break something like we did here in April. I think the bond market's going to tell us. China, just quick peek here, just off the recent highs in HSI, CQQQ up a little bit. Alibaba, okay, hanging in there. Alibaba's come back up. Has Baidu responded? A little bit. Really volatile here on Baidu, or yeah, Baidu was up, 10%, gave all of it back. At least it's stabilized. I'm still liking this stock to like 105 or 115. FXI, have some shares. I'm trying to get this all-time high or this back to highs. I'm going to take some profit there. KWeb, same thing. I have some shares trying to get back to these intermediate highs. JD at 32, 31.95, just selling some calls. Schwab dividend, fine. Schwab growth, fine. SEHY, this is the non-US, fine. Stalling sideways. It's like the market's kind of come back and given the US a fair shake. So Schwab growth. We've had a bit of a decline in the 50-day moving average. So how many stocks above the 50-day? We're down to 62% in the S&P. Stocks above the 200-day were down to 55% from recently at 63. Nasdaq. This is all market breadth discussion. Stocks above the 50-day is around 65%. Stocks above the 200-day 67% off the recent highs. So market breadth took a little bit of a breath, which is fine. Market breadth took a breath. That's stupid. It just took a little bit of a breather, meaning like not everything was just ripping above the 50-day, above the 200-day. We got back into the buy zones for majority of stocks. How many stocks above the 200-day? Over 50%. That's a good buy zone. Okay, how many stocks on the Nasdaq? 67%. It was up to 76%. That's a pretty good buy zone. Okay, Costco fading. I think Costco can come back down to here. And if it does, I may be willing to do some ratio spreads. It's still an expensive stock. Probably not the best allocation in all honesty. Walmart collared out to August for 100 by like 85. Nike looking good. Some naked puts are performing well. Home Depot and Lowe's, nothing too exciting there. MasterCard, Visa, probably waiting on earnings season for these. Johnson Johnson, big rip on earnings. Progressive, just slowly going lower. I think this hopefully will find a low around like the 230 handle, 225. This is also typically a lower beta stock, 0.71, so it shouldn't really correlate with the S&P, tick for tick. Chubb is down. Palantir just going to all-time highs, no big deal. Palantir, I have some ratio spreads. I don't know if I have anything right now. Let me check. Palantir. Yep. So that's a little scanner play, ratio spread. I'm up 80% of that profit on a ratio spread. That's not too bad for taking some profit. Um, yeah, that's not too actually, I mean, up 80%. Sit on this over the weekend, maybe out to the end of the month, maybe take some profit before we have maybe a turn in August, September. It is going to be a volatile socket. If it turns, it'll turn hard. I don't think this is going to be threat necessarily, but you know, to make up to $500 here, $250 here, I'm up about 80% of the max credit. It's probably more capital efficient just for me to take the profit. I mean, this one I'm willing to close. I've got 1111s up 96% of max credit. So this one I'm probably going to close on Palantir. 1111. I can close that today and update that in Pulver alerts. So that ratio spread is up 80%. My 1111s up 96% of max credit. That's worth taking the profit, not worrying about it. I can only make another $9 on the trade anyway. Well, I take that back. I can actually make up to $500 plus the 250, but we'd have to see price drop back below 125, which is possible. But if I can take just most of the credit now, I probably should and would and will. That's not a bad trade. So that's a nice little winner on Palantir. So I'll take some profit there. Nice. Hims off of that announcement that was something wasn't like Ozempic, like they were removing Ozempic from their offering, or they had some, I don't know, they had some big slap on the wrist and markets hated it, but it's still responding. Carvana off the highs, Salesforce pretty crappy still. Let me go to Zoom. Should be Zoom or Zoom ZM. Maybe this type of structure. Maybe something like that. I mean, the safe trade on Zoom, like this is a pretty clean ceiling around 90. So it could just be more accumulation on Zoom, but maybe one to consider. Fundamentals look strong enough. We have a quick peek here. So ZM. I mean, Snowflake looks really good. Way below estimates. Not bad, not bad, not bad. Price to earnings 21.5. I mean, we got fair value at 120. That's got some legs to it. Maybe a 65, maybe a 60. Let me see what I can do here on a little fancy ratio spread, maybe. Zoom. Let's go out. So we have earnings August 20th. Let's go end of the year. I could probably do a good ratio spread on this one for some income. That low is 64. This low is 55. Maybe doing something at like the 62.50 by 60. $1.08. $1.39. This isn't bad. Little $100 here. Do this on everyone's account and grab, maybe $1,500 on Zoom. Probability of profit's pretty high, about 88%. Chance of assignment, I would say, is about 10%. If I get assigned, I'll work the shares. What do I get for a covered call? An at the money covered call can pay anywhere between about $2. What's that premium? So $2 out of a $75 stock. That's not great call premium. Not great. But the chance of assignment's pretty low. I mean, if I owned it at 60, I'm owning this thing at August 2024 lows, which was a nice correction zone, right? We had that dip from July to August. That was lows. We come back into 2019 lows. We come back to COVID lows, 2022 bear market lows. I don't know. I mean, I think I'm willing to kind of own it at 60, work the cost basis down to 60 or lower, and Zoom should have some upside. So I'm going to take this trade. So I'm going out to January. A 62 by 60. Let me see if it's worth it to go up a little bit. Not really. if I wanted to go up and collect a little more income. I mean, that puts me at like a 20 delta, changes my probability of profit. That's more income, but the safest thing for me is just grab the $100. Grab the $100. That's not bad. All right, I'm gonna go zoom. Looks like a 116. Or I can go February. Let's see what this one looks like. I can go 65 by 60. Let me try this one. So if I went February, 65 by 60, less credit. This one, this is more credit. I'm going out an extra month, but the assignment price is a little higher, but my income is double. So for an extra month, I can make, $240 versus $110, but my strike price is now 65 versus 60 as far as an assignment goes. Profit trap would be this plus the 250. February is usually a pullback month. So if I took assignment at 65, I'd only take down two. I like the other one better. I like to own it at $60 for less. So if I went Q1, this one might be a little bit better. Okay, I think I'm going to take this trade. I'm going to go 62.50 by 60, pull in $1.55 or so. I'm going to try to go to that 320 expiration. All right, so let's see if I can get filled here for $1.60. Okay, $1.60 not taking. Let's go 58. 57. 55. All right, I got filled for $1.50. So $1.50, that account, that account, that account, that account, that account, that account. That one, that one, that one, that one. All right, those are the accounts that are going to get filled. So let's do this. Filled. Come on. $1.49. $1.48. Jeez, oh Pete's. All right, 48. Okay, so trades in $1.50 to $1.48 credit. $1.50 to $1.48 credit. All right. So here is the trade. Zoom. This is out to March 20th. And I'm adding puts. So I'm going to add a buy put, sell put, get rid of this one. And I'm selling the 60, buying the 62.50. So that's the trade right there. Pulled in, this is 180. What fee are you taking in? Good Lord. I pulled $1.50 out of this trade. Anyway, that's what the trade looks like. If price stays the same, price goes up, price goes down a little bit. There's still a profit trap here. If price comes back down to $60, we'd retest those lows. I have a potential 250 profit trap on top of the credit that I received. So max profit on the trade would be the 250 plus $1.50, so I can make $400 on the trade. I'll take that screenshot. Okay, so I'll get that posted for Pulver alerts. Zoom is in, and a 62.50 by 60 ratio spread, $1.50 credit. So what I'm expressing here is I'm willing to own shares of Zoom at $60. Probability profit, that price stays out of the way, is about 85 to 86%. Yeah, 85% chance of profit. If I get assigned on the shares, that brings me down to a risk of $1.50 plus 250. So it lowers my cost basis from 60 minus $1.50 minus 250, $56 break even, which puts me at around, about a 10% chance of like assignment and risk, which isn't too bad. I mean, I'll take those odds, and we can max this thing out around $400 profit if we get into that ratio spread trap. Otherwise, income around $150. If I do that on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, it's not bad. $1,500 income, and just another little trade for the bottom line. Okay, so we'll get that posted in Pulver alerts after a wrap up here in just a couple minutes. I'm going to try to see if I can find another trade. Let me add in some. I'm going to add into my watch list here. Zoom. Let's talk currencies for a moment before we go. Again, anything currency strength? Probably not. How the heck did that happen? Okay. Aussie CAD. Let's see. We're at 62.83 today. Coming up to my resistance level. Let's see if this level reacts or if the market's going to try to get up into 6290-ish, 6300, maybe testing the highs from Tuesday. It wouldn't be impossible. I mean, if we hit that move for the day, we started out down here around 6260. Is it possible for the market to move up about 0.6% to retest the high of the day or the week on Tuesday? Yeah, it's possible. So see if we get out of this dead zone. I do have a butterfly spread at the 629. I'm watching that. We're 628, 626 on SPY. I'm looking at a 628 or 629 pin price for SPY if we get up there. So we're above 625, maybe in some open space. 628 can get hit today. I'm curious if that helps my butterfly. We maybe tap that 630 zone, which is right here. SPY. This should be growing. Oh yeah. You can write this down. Don't be surprised if we hit 629 and 630 by today or tomorrow. That's a big gamma level, and there's some open space to get there. So I can see this market drifting, melting up, trying to tap those highs. I do want to kind of fade that high, but 629 and 630 is a big pull. That's a big magnet for price this week. So by tomorrow and Thursday, or tomorrow and Friday, probably able to tap that level. But I would think after hitting that point, we probably fade off of it. So thinking of some trades. I might actually do like a broke wing butterfly and kind of fade that if I can get a good fill. Trade that out for like a week or two. All right, so I'm keeping an eye on those. Watching this dead zone level for the day, see if we get back to try to retest Tuesday's high. Trying to think anything else. Markets are up. S&P's up 1/3, 1%. Nasdaq up almost 2/3, 1%. Dow is up 1/4, 1%. Russell up 0.8%. VIX is down to 1683. Dollar index, oil, gold, silver. Gold's flat. Silver's sideways. Bitcoin's sideways. MicroStrategy sideways. Coin up 2.8%. Still have some room up to 455 before I'm threatened. I'd love to see that call counter work out nicely and give us some bonus profit. Ethereum ripping over 1% again today. Happy with that. Let's see if we get up to that 4,050 level. That's a nice little intermediate target. I want to go some currencies before we go today. Aussie CAD. Just going to wait. Still waiting for dips at the 87.50 zone for a pullback. Aussie Swiss. I'm still long and holding, trying to get back to this 55.50 zone. Aussie yen. I don't have any trades on yen pairs right now. Aussie New Zealand, nothing. I'm still long in this one. I'm looking to get back to like 111.50 or higher. Aussie dollar. It's like this annoyingly perfect channel that I'm just not buying. I want to get a pullback to like 64 or 62 if I'm really going to buy Aussie dollars, those levels. CAD Swiss, hopefully catching a bottom. Hopefully, but we'll see. I want to see this thing. Like, I need a bottoming pattern here. This thing needs to hold the lows, get back to these levels, sweep these highs, give us a reversal pattern, give us a 5-wave move, get the fudge off these lows. But not yet. Just hasn't happened yet. So I wait. CAD yen, no trade. Swiss yen, no trade unless I see a big fat topping pattern, which is a long ways away. What's funny is Swiss yen could actually be a positive swap trade if you sell it, because the Bank of Japan is at 0.5 and the Swiss is at 0. But this is just not a currency pair that I trust to sell. Euro Aussie, nothing for right now. Euro CAD, nothing. Euro Swiss, I'm still holding lows. Euro pound, all over the place. Maybe just a bigger range. Range highs, range lows, just more volatility on euro pound. Intraday highs on SPY, that's good. Hopefully intraday highs on SPX as well. Euro yen, overbought conditions, maybe enough to get into this like 173 to 175 zone. Euro New Zealand, say no trade there. Euro dollar, fading a little bit. This is the inverse of the dollar index. Pound Aussie, equal lows to buy from. If you picked up a 205 level, that's not a bad entry. Pound CAD, maybe some support here at the 144 200 moving average to keep this thing alive. This has been making higher lows for a while. Pound Swiss, good spot to buy those lows if you did. 107 down to 105 or so. I guess 107, 106, nice spot to be buying low. Hopefully this pulls back into, this 111, 112. I was actually targeting a 113.50. I think we still get to 113.50. Pound yen, nothing. Pound New Zealand, choppy. Pound dollar, broke the trend line. If the dollar continues to show a little bit of bid, then this could be a topping pattern to at least force a retracement back to this trend line. So, I mean, it's a swing trade. You get a pullback here like 50618, stop loss above, go after a symmetry swing, see if the pound dollar offers that. That is a swing trade if the dollar gets stronger. New Zealand CAD, I'm waiting for a pullback to like the 80, 50, 80, 25 zone to get a buy trade in for a 618 swing. New Zealand Swiss, no trade, hasn't turned up yet. New Zealand yen, nothing. New Zealand dollar pulling back. I wouldn't mind taking a scoop at this one around 58.50. That'd be level one, and then buying it again at 5,600 and just kind of waiting this thing out. Dollar CAD, maybe on the verge of breaking this trend line. Just don't be fooled by this one. This one could like break the trend line and still hug the right side of the trend line. I'd rather be buying it as low as possible. I don't like this noisy area. So I'm unless this is like an obvious move back above like 1.40, then we look at a swing trade, stop below, swing back to the highs. But that'd be watch oil. If oil's not making a big room to the big move to the downside, I wouldn't trust that the dollar CAD is going to go higher. So anyway, dollar Swiss, definitely catching a bit of bid off that 7,900 zone, which is good, but there's a long ways to go. So if this breaks the trend line, hooray, we get a pullback here, make a higher low, higher high, hooray, all these things, right? So just if it breaks the trend line looking better, I'm trying to get out of my dollar Swiss around 87 to 8,800. And then dollar yen, probably some resistance here at that 149.50 to 150 zone. Be careful. If it turns, it can turn aggressively. If it doesn't turn, we're just grinding higher. It's still a huge range, literally set up from July to August 2024. It's the same range. So lows are respected, highs are up here. Your guess is as good as mine. If you trade dollar yen, you trade it, like, just align it up. Take your daily structure, go down to like a 1-hour chart, 50-minute chart, 5-minute chart, get your alignments. Maybe you got some flow. Okay. All right. 1 month implied correlation. I think it's fine. All right. So for the day, let's see where we go. I'd like to see if price can stay out of this dead zone for the day, get up into maybe retest the Tuesday high if possible. That'll only be about 0.6% on the day, but it's possible. We started out pretty much right where we closed yesterday, so maybe the market has some flows to the upside. Just stay out of the dead zone. Stay out of my dead zone. SPX 62.84. Stay out of my dead zone. Let's go to 62.95. Let's try to test 6,300. Watching. All right, I'll let you go for today. Let's come back and do it again tomorrow. Thanks, everybody. See you. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.